The audience in terms of getting any clarifications or raising some questions to the Finance Ministry officials who would like to take the first.
Regarding this government officers or government servants salaries increase, we remember that the present government, I think, increased about, if I am not mistaken, about 10,000 rupees when they came to power. In the meantime, we are also aware that this 10,000 into 1.5 million into 12 months is a huge amount of money, where I think taxpayers also will have to bear a major part of the cost. My concern here is, okay, on top of that, now we are giving another 2,500. I think it's a welcome thing, because if you look at even the survey done, I think 90% people, they are expecting to reduce cost of living. My concern here is, out of this 10,000 or 12,500, I believe about 90% of those expenditure is being utilized for consumption, which is not a good thing. We need to understand. At least if you all can think about how do people invest in, either for savings or capital investment kind of assets would be ideal. Because otherwise what happens is, we don't utilize local produce ones, because we always consume imported stuff. As a result, there's going to be a huge impact to your balance of payment. So that is one part. The other part is need to understand how are we going to educate these people, especially looking at from now. Recently we saw an article about the productivity in the state sector is about 30%. So 70% is totally unproductive. So, but government is going to finance for the entire 100%. I think those are the things that I believe that we'll have to seriously look at. If not, it's going to be a huge issue. I think I would like to ask Mano.
Mano, just before you answer, 2015, this huge stimulus involved, and I think we are paying for it now, right? And that Finance Ministry is not here, right? So that is one, and particularly you're giving a message that remain in the public sector. Please join public sector. There is a better deal.
Well, I think to go on what Sujiva said earlier, the factual position is in 2015, there were relatively generous agreements that were salary increase given, and this goes up to 2020. I mean, there's a circular which increases the salary every year by about that amount. So that was substantial. So when you look at the 2020 and compare 2015, is almost a doubling or even more of some of these salaries. Now, put that aside, this issue was, there was a big issue on the anomalies created, right? Because we had various trade union action, we had the railways people coming in, we had the Indian revenue people coming in, and all sorts of things. So we decided, the ministry decided and the government decided that without sort of addressing each issue separately, which causes further anomalies as we go on, and particularly these demand for wage increases get higher by the day when we get into an election cycle, the President appointed a salaries commission, which was specifically asked to look at the anomalies created by that circular. So we are not, so they looked at the anomalies, and the report is out now, right? When we looked at the report, the implementation of the full report we would have simply not been able to afford it. I mean, the number was quite staggering in terms of total this thing. So, and then the cabinet, after considering the report, appointed a very high-level committee to see how best it could be implemented without sort of blowing the budget completely out of line. So that work has started now. So this one is because the Honorable Minister also gave assurance that once the report comes out, that we will do the best we can to reduce the anomaly. So this 2,500 is an allowance which is being given, so that will get subsumed once the report thing comes in. So all the points you made is true, and it is a cost. But going forward in the medium term, Nista, we got to address this productivity issue of the government service. Actually, we know applying generalities don't work because we know that there is a lack of productivity. But there is no lack of productivity in every area of the government sector. There is lack of productivity in some areas. Right? On the other hand, we know that they are poorly paid. Now, if you take the government sector as a whole, they are very poorly paid. But so that is also an issue. So the trick is in the long term to actually look at productivity and pay some of the selected people more. The problem is that we are in this situation where it has to be given across the board. So this is an issue. Because along with this issue comes another issue which was raised earlier, not here but in the earlier forum, that our pensions become a problem. Because we have, somebody said today, 90% of take-home salary before is pension. No other country has that, at least developing countries have much less, like 60 or 70%. And those countries have contributory pension schemes. We are nowhere near that. Right? So pensions is a mid-term problem that will come to haunt us somewhere in the near future and is getting worse. So now in the budget there is also a small line which says a pension policy and a scheme should be worked out, but we are far from doing it. So I take your point. It is an issue that we have to contain and manage.
You know, there are a large number of government institutions which is eating into the hard-earned income of the government. See, now this budget, I haven't seen anything being addressed as to how we are going to make these sick companies or sick industries that the government is managing, how to get over that. That is one of the issues that I have. The second issue is about what Dr. Vijayawardena raised, that he said that this he would think as a development budget. So, of course, I can see the human capital being addressed in terms of education, the STEM and the vocational education, the private sector getting private educational institutions getting support for students to get engaged. Those are all very fine human capital development. But I fail to see where the long-term strategy, where we want to be in terms of, say, 2030, how do those plans get connected to this budget really? I mean, I have my sympathies with the government because the election is coming up front, but you know, somewhere we should get connected to these things. So how do we really connect up there? Thank you.
My question is that normally insurance policies are not paid out because of the small print at the bottom of the page, right? So now we have Enterprise Sri Lanka. What is the small print and where can we find it? Because you all tell these loans and then when you go to get it, you can't find it. So,
Okay, thank you.
While Enterprise Sri Lanka is promoted, the things around it, especially the laws relating to employment, to start employing, firm, the laws are very rigid, especially the Dev Act and all are very rigid, where hire and fire is not even heard of in Sri Lanka. So while we protect the employees, we have to protect the employers. But I don't see any employer protection in that case, rather than to be saddled with the unproductive workforce at times.
This is in regard to the gem and jewelry industry. We've seen Singapore being a hub in the past. Then it got saturated, then it went on to Dubai. Dubai became a hub. There too, we feel that there is a saturation. And this is a source country. And I think the state should get in and support the industry because it helps tourism, it helps much more than that. I think if we can concentrate on that industry, it will be really a good effort. Thank you.
Now, you know, in Sri Lanka, there are a few holy cows. You know? Right? You have to understand that. One is the labor law. Right? Any attempts to reform labor law is, comes with some serious comebacks, right? Politically and from the public, unions. Now, I'll give you an example. We had a very concerted attempt last year to look at some of these working hours and rules for women. We had many discussions, but it comes to a stage where it comes to an absolute full stop at some stage. Right? So unless, and we have reiterated the same thing in this year's budget, right? But it will, to be very pragmatic, that is one area that we may have to carry on for the first year of a new government. This is not going to happen anytime soon now. And so that's the reality. When it comes to hire and fire, we are really at the holiest part of the cow. That won't work, right? The practicality, it's a problem. I mean, we might as well face it. So what do we do in the short term? We need to work around it, right? Long term is fine. And I think there are some reforms that any government should do in the first year of its office, because then the benefits will start accruing in the third, fourth years. So it can't be done in the last year. The other point I want to make is the small print on Enterprise Sri Lanka is basically you have to have a viable proposal. That's the small print. You can't rock up to a bank and basically say you want 500,000 because you just got up in the morning and decided that's a good thing to do, right? So you need to have a viable proposal. Now that's where some of the problems will occur, because people with bright ideas, especially if you buy this thing, it doesn't necessarily mean it's a viable commercial proposal, right? So we also got to protect, as you said, the banks, because ultimately the banks are custodians of public money. So we can't expect the banks to lend willy-nilly to everybody who turns up. So if you have a viable proposal, which you think can be converted into a commercial idea, then you have a good chance. But remember that our banking sector also is is to some extent risk-averse, security-based banking sector. If you want to have 500,000 rupees to start something, then you will ask for your mother-in-law's or your wife's land and all this type of thing. That won't work. So that's where the government is coming in and saying that for the small entrepreneurs, I think 1.5 million, we will, through the credit guarantee scheme, we will guarantee that loan to the bank, providing it's a viable proposal. Because we can't expect the banks to take up this, as somebody pointed out, because it will be bad on their balance sheets. So that's it. But remember that in actual implementing this, we are having some difficulties, because traditionally the bankers, I mean not all of them, especially going for the SME loans, are averse to sort of what they call security-less lending. So, but as long as you have a good proposal, that's all that's in the small print. Maybe they shall.
I think you covered most of the stuff. Just a couple of issues I think that were also raised. One was how the budget links into the longer term 30-year plan, say. So I think a lot of the issues that we tried to address in the budget are some of the structural impediments in the Sri Lankan economy, right? So, for example, if you look at things like labor force, the fact that we have shortage of high skills in certain areas, there we've tried to link in government support to work with the private sector, where the private sector would to initiate the training program, the government will provide a stipend. So you're building the skills that the private sector needs. Then also more fundamentally on education itself, moving towards an education system that nurtures creativity, independent thought, analytical thinking, and so on, which is creating the kind of knowledge economy that Sri Lanka wants to be going forward. Another issue is in terms of access to affordable finance to support investment, to drive private capital and to drive private enterprise in the country. That again we need to see as being the future of Sri Lanka. It needs to be an economy driven by private enterprise. So that also through Enterprise Sri Lanka, we have had teething issues in the early stages, but we're building on that as well. So one new element is the SME Guarantee Fund. Also, we are looking at going into some MOUs with some of the key government institutions, such as say ITI, ICTA, and so on, where we can look at upgrading the product proposition or the market proposition of some of the businesses. Also, maybe linking with some of the private sector firms as well, so that maybe an Enterprise Sri Lanka customer can link into that value chain of say a John Keells or a larger firm. So we need to we are looking at building on that as well. That also has been mentioned in the budget. And also another area is in terms of participation of women. I mean, the question was raised about labour, access to labour and so on. And yeah, agreed that hire and fire laws will be very difficult to deal with. But I think we might have some room on the flexibility. On flexibility of working hours, but that I think is a less controversial area, and maybe on a more focused level that can be addressed. And also, of course, to make sure that the labour that we do have that are skilled. So those are the kind of areas where the interventions from this budget have tried to fit in. So it does address some of the short-term issues, but also I think it addresses some of the long-term challenges, and it helps us on that path of where we want to be going forward.
On the gem and jewellery, Deshan, gem and jewellery hub.
Yeah, so there were a couple of interventions with regard to some of the upfront costs. I think on PAL and I think some of the other import duties. I think the fundamental issue that the industry faces with regard to the income taxation, where because of the difficulty in terms of identifying your input costs, there is that has been an ongoing debate. We haven't been able to come to an agreement between our fiscal policy teams and the industry in terms of how to solve that. So at this stage, what we have done is to try to address your upfront costs to some extent. But let's continue talking once the Inland Revenue Act also matures a little bit more. We can see how that can also fit in on some of those other broad issues that you have.
Very briefly, Chandra's first question on public enterprise reform, I'm afraid that's another holy cow, but basically there's a lot of work that has been done. We need to sort of start quietly implementing it. Right? It's not as if nothing has happened, but there is a public enterprise program that the reform program that the World Bank is helping us with, but the progress is slow. But some very good ideas have come through. And one of the good ideas, though is not strictly a public enterprise, is the reform that we are trying to do on the Samurdhi. The first stage is basically we have got cabinet to approve the eligibility criteria of Samurdhi, right? And then we are working with a software firm to set up the databases. So we will be able to quietly, see that the Samurdhi goes to the people who actually deserve, and it serves another purpose because we are trying to move into a situation maybe in the medium term where the people who deserve input can actually be given cash transfers rather than giving subsidies to everybody. Now I can pay for my full diesel price, thankfully, but it doesn't mean that I have to be subsidized because somebody else can't pay. So we want to move in that direction because if we can target the deserved people, then we can move the cash transfers to them directly and it will cost much less. So therefore we can even increase to some extent the help to the vulnerability. But it's a medium-term process.
This $400,000 for condominiums for foreigners, is just food for thought. Can't you have 400,000 for 3 years and increase it, say, the $1 million for about 10 years or 7 years? Is it possible?
No, I suppose the concept it is possible, but this is a start to see how we implement it. I'm sure variations of that is always possible. Somebody might ask why 400,000, why not 350,000, So we started with something, so let's see how it goes.
But is VAT coming off for any purchases afterwards, right? Yeah, it's coming.
There was a question that was raised, if I may add on, and I think in the earlier thing as well. Now, the wording here is deed of agreement, right? But maybe could have been better worded, but basically what it means is what we did earlier. If you have a sales and purchase agreement signed before the 31st of March 2019, not a deed of transfer, where you have confirmed that you are buying the apartment, that will be exempt from VAT. So it's very simple, we will clarify it further, but in our mind that stands, what we said earlier, that stands. So technically, if you have a sales agreement after 1st April, you pay a small advance and have a sales agreement, that won't be qualified. So I can see now, people like Krishan and all will put a lot of advertisements in the papers,
Good
full page
us.
ads, with discounts and all that, so that will happen in the next month.
Manu, you're talking on public sector reforms, but you are struggling to sell some of these hotels for 3 years. What's the progress?
Well, hopefully we'll get rid of Hilton and Hyatt this year. Right?
This year?
Yeah, this year. Actually, Tilan should be here. A lot of the work has been done. There are about 30 expressions of interest, so we'll probably get that off.
Where is your tourism incentives in the budget?
There are quite a few. Anyway, tourism has a fairly generous tax treatment. It's treated at 14% corporate income tax, so it's below the normal threshold. But even then, there were some specific issues that the industry faced. So some of the upfront taxes that they have we reduced. So the NBT on tourist hotels was reduced as well. Also, some of the import duties that they face on some of the cost of refurbishments, cost of some of the other day-to-day needs. The cess on those will be reduced towards the middle of the year, probably around June. So that way we are reducing some of the further cost burdens on the industry to support their already a fairly generous corporate income tax rate of 14%.
Where is your incentive to bring in tourists? Because I see a lot of hotels with high occupancy. So where are the incentives in the budget for those promoters? I don't see any. I travel quite a bit. I get on the aircraft and I see all the tourists unloaded in Maldives, and then the plane arrives here empty. So where is that incentive in your budget for those tourists to come into the country? Because are we doing a service here or disservice towards that industry is what my question is.
Okay, let me also, Krishan, maybe you can, they've started to tax this, the Airbnb aspect. There's some start. What is your own reaction to that? I know you're in the formal sector, but plus the response to that question about aggressive marketing.
No, I think it's a good thing. The informal, I don't think taxing the informal sector is going to really bring them on a level playing field, in that we are anyway, the formal sector is priced at a different level. But it's only fair that they should also come into the tax net. And also the more important thing is they should be regulated to some extent, because you have all these issues around Airbnb and the informal sector, because you have problems with service quality issues, accidents and all that. So the regulation, I think, is the more important thing than bringing them to a level playing field.
Okay, fine. Manu, I have a question. This new NBT on credit card overseas transactions, which also includes people pay tuition, exam fees.
So there's already a stamp duty of 2.5%, which predominantly goes to the provincial account. So this is basically subsuming that. Okay. So it's not the increase is 1%. So it's 3.5 in total. So it's of course a revenue measure, but also it is to some extent addressing this issue of digital services, which at the moment is completely untaxed, right? So if you, for instance, if you use, say, Dialog TV, Dialog TV will pay the usual VAT, the telecom levy and so on, but for Netflix, there's nothing at all. On services like Uber, for purchases from Amazon, from any kind of e-commerce transaction overseas, that it would not apply at all. So, of course, there have been questions raised with regard to, okay, how does this fit in with the move of becoming more digitally oriented economy and so on. But again, this is a very targeted thing only for these external transactions. This does no impact on, say, a local e-commerce company in terms of for what I would buy from, say, a Takas or an Econda. Okay, that doesn't get affected. This is only for that. And I think it provides, again, some degree of, increasingly you're going to see local service players competing with foreign service players on various different sectors. So this is in some way to bring in a degree of not a level playing field per se, but getting there.
Plus your spend on overseas, right? That's also included, right? That's okay, fine.
I have a question on ESC.
Okay.
Now this, there will be a ESC at the point of import of any article or goods. So will it be going to be a credit at the point of sale, or will it be a cost?
So you can set it off against income taxes.
Yeah, like special commodity levy.
Yeah, of course.
This question is about the financing of the budget. Historically, if you look at the deficit financing, this year we see a disproportionate amount of the deficit being financed domestically. I would like to know your views on the possible inflationary and crowding out aspects of that. Two, about a third of the new funding proposals are through vehicle taxations. I'd like to know your views on the sustenance of that. Thank you.
A bit louder, please.
Yeah, the last one through indirect taxation, is that what you said?
No, through vehicle taxation.
Direct, okay, right. Maybe I like Mr. Vijayawardhan also to sort of shed some insights with the numbers, macro numbers on the budget, and also
numbers given in the budget are very, they are very clear. I mean, the overall budget deficit is going to be maintained at 4.4% in 2019, despite the fact that we are having a very difficult time period. And what matters to us today is that since Sri Lanka had accumulated this public debt over the ever since we were independent from the British, it's now time for us to gradually reduce it, the reliance on the public debt. For that purpose, the only available solution is to cut down the budget deficit to a lower level. In 2019, they were expecting to reduce it to 3.5%. Unfortunately, given the financial circumstances of the country, in the first 4-month period, the government has not been able to bring it down to 3.5%, but the long-term vision of the government should be to bring it down to a tolerable level of about 2% of GDP, and eventually, hopefully, to balance the budget so that, like Thailand, we must be able to cut down the level of public debt of the country.
No, I think your point is right, but over the last 2 years or even more, the central bank has kept a very keen eye on inflation. And whatever policy decisions we take, when we actually calibrate the actions, we will still keep that very much in mind. So your point is right in terms of when we borrow domestically, there are inflationary pressures, but we will look at that carefully and sort of balance it. So we don't want inflation to go completely way out as it was some years ago. So that's one issue. The other issue is that ultimately we had to increase incomes. When I say incomes, national income. We can't go on, you can't have a situation where you have a 3.5%, 4% growth, and it will take a long time for us to bring budget deficit down. So we have to really increase that. But we have to increase that in a sustainable way. The way we have to increase it is, in other words, is to bring in FDI, increase our exports, so that we have more dollars coming in. So the focus of this budget, one of the main focuses is to give the necessary incentives so that our export industries are actually much better off, and also that we attract FDI. One more thing on FDI is, a lot of people have this misconception that FDI is directly correlated to the tax incentives. There's some aspect of that. But also, we have to improve on ease of business index. We have gone up a little bit, but we have a lot more to do. I mean, for foreign direct investments, for any investments, the difficulties you have been going through, processes, etc., are sometimes much more frustrating than the incentives that you get. So I think there is also a focus. I think Minister Harsha is leading an effort there, where we actually improve that. So that I think that will be a great incentive. So I think my answer to your question is that the only way to mitigate this while we do everything else is to increase exports income, get in more dollars. That's the only way we are going to drive the economy and do it in a non-inflationary fashion.
Can I quickly come in on that, on the revenue question? Even though in this year's budget, the most of the proposals are on excise, alcohol, tobacco, vehicles, and a few adjustments other than that. But the bulk of the revenue increase is expected from previously introduced revenue measures. So, for example, a lot of the 2017 November budget proposals were fully implemented only in the latter part of 2018. So the DRL, the number of others, the telecom-based levies and so on, all of those will come into full effect only in 2019. Also importantly, the Inland Revenue Act, which began implementation in April 2018, you're going to see the full impact only in probably Q4 of this year. So a lot of those, the kind of lagged revenue we are going to expect to see coming in 2019. Also must remember that a lot of, probably about half of our revenue is collected at the border, and with a 15% depreciation of the currency last year, that's automatically going to feed into a revenue increase at the border in 2019 as well. So there's quite a few different elements from previous previous amendments and previous introductions, that will really see the impact coming in this year. Your question with regard to deficit fine or with regard to inflationary impacts of deficit of the budget deficit, it really will convert into inflation only if it is if the monetary central bank deficit finances it. An important legislation that is coming in soon, the draft of which is now pretty much done, is the new Monetary Law Act, which really instills a lot more disciplines with regard to monetary policy in terms of the conditions under which the central bank can fund government deficits and so on. So that I think will be a real game changer in terms of controlling macroeconomic discipline and controlling inflation going forward as well.
Shaman, probably you can answer this question. This is with regard to branches of foreign banks. If a branch borrows from its parent entity, will it be subject to withholding tax?
Under the definition of financial institution, under the Inland Revenue Act, if a branch borrows from its head office, there should be no withholding tax on it because it's a financial institution. But are you asking the question in context of the newly implemented exemption where a loan given by a non-resident?
That's right.
So there, it's actually, it'll be a policy decision, so we have to wait and see what the wording is, but the direction seems to be that if it is from a related party, that exemption won't apply. But under the new Inland Revenue Act, a branch and its head office are two separate entities. It's considered as two separate entities, but then again they're related, so it'll be a policy decision to see whether or not that will be extended between a branch and a...
For commercial transactions and transfer pricing rules will apply. So our view is that it should not be subject to withholding tax, so it will be over to the decision makers.
Yeah, no, we'll discuss that with our tax advisors and we'll make a
There is this view that you don't need, there is no innovation in terms of taxing the usual tobacco and liquor. Also, the industry has been warning, the more you tax, there will be demand for less revenue plus shift to illicit. I mean, isn't that a reality check for people in the treasury?
From this year onwards, I mean, we have also been talking to industry where on a different matter on this tobacco and alcohol. The problem with the industry that the industry has is there have been in the past ad hoc changes, in this thing, so they can't actually plan any time for the future. So we have introduced, as they said, what they call indexation, which is linked to, we want to give the industry a 3-year framework, saying that it will be linked to GDP and inflation, so that they have some certainty that their prices will only increase over a particular band. Now, what has happened this year is that we have, of course, for revenue measures increased slightly, I think 10 or 12% or whatever it is. What is important is to keep that, the difference between soft alcohol and hard alcohol, and we felt that because the difference was slightly higher, that there was a migration, not only to the soft alcohol, but also to this illegal thing. So we tried to address that sort of in a particular way, but the first year may not be the ideal one. But the point is that, yes, beyond a certain point, it has an effect on our revenue as well. Like, when you increase beyond a point, it hits our revenue when it goes to completely unrevenue areas. So it's a fairly delicate balancing act, but more than that, the industry requires some certainty for investments, etc. So we've begun to address that. It may not be perfect in this time's budget, but we hope to talk to the industry and give them some certainty that this is how the increase will be in the next 3 years.
It's notable the concessions that are given to the tourism industry in terms of easing out some of the upfront taxes. But another thing that has been addressed is the cost of beverages and imported food items. One big driver of tourism is the F&B offering of a destination, and this has come up time and again, and yet we find that some of these costs have gone up. Now we know that this is not the easiest of things to manage, but how do we do this in terms of making this an attractive proposition for a tourist who comes on a vacation to also spend leisure, and that doesn't always look very inviting.
Thanks. Desha, just quick answer.
So in the 2017 November budget, there were quite a few reductions on cessors in particular. So we looked at, from requests from the tourism industry, so areas like some cheese products, another dairy, red meats, cess on imported wine, cess on imported beer, all of those were reduced. So I think that would have had some impact on some of those beverages right now. But I think this year we didn't have any specific additions to that. But the belief was that what was done at that time would have had a sufficient impact on that sector.
So this is with regards to increasing the workforce capacity in the IT industry. So the government will pay a stipend for internships. So is there a cap on the number of internships that you will sponsor, and when will this program start?
We're looking at 1,000 for the year. In terms of the timing, we were collaborating with Slascom in terms of developing it, so we'll have to discuss with them as soon as they're ready to kick off, because in terms of the funding, that funding will be allocated as soon as the budget is passed.
There was a proposal for IFA investment fund account to be brought back, which was brought in a budget about 5-6 years ago, where part of the corporate tax on banks was put into a fund where it was lent on long-term basis. But this is where the ideal situation where banks are called risk averse, make use of that fund to invest on, as Mr. Titawala said, feasible projects without asking for 100 collaterals. So you can take a equity stake by using that fund, which is a sunk cost to the bank anyways, and give a tax benefit on the potential cashing in of the investment. So to bring back this IFA fund once again.
Lately we've seen the BD market expanding rapidly, mainly because of the price disparity. Now, for instance, a normal stick would cost about 55 rupees, whereas BD cost about 5 rupees. So I know the industry has been regulated and the cess is increased recently. So, and also the industry is deemed to be a cottage industry, and there's a lot of rural mass votes involved there. So do you have any plans to create a level playing field in the industry, given the fact that especially there's a lot of revenue opportunity in the industry?
You yourself said it has been another sort of contentious proposal that gets put in and gets amended at committee stage. So we put it back again and hopefully we will not amend it this time, because your point is well taken. Not only do we lose revenue, but also it distorts the playing field. So first attempt has been made, so hopefully we'll carry on with it.
Fine. I'll wrap it up with one general question to the panel from Bengumal as to I don't think it's end of the road in terms of getting the right policy in the budget. So do you feel any particular sector or proposal that you are looking forward to but not contained in the budget, so that both Deshal and Mano can take this message back and say, look, we haven't done our job?
Yeah, so thanks. There was something on the budget that really caught my attention, but it was not discussed in any of the discussions. I didn't see it in the budget highlights. There was a conversation around the trade treaties with India, China, and expanding trade with India, China. Because we all talk about Vietnam in many forums, and the Vietnam story is predominantly driven by China +1 strategy. All the multinationals, when they set up entities in China, they wanted another country to diversify the risk. So Vietnam came to the party. That's how Vietnam got into the picture, and also their trade treaty with US really helped. So one large exporting Vietnam contributes like 30% of Vietnam's export. So for us in Sri Lanka, what is our future? I think India is a big part of our export business in the future, and China, we can't underestimate the power of these two engines, because we believe, this Standard Chartered Bank research, we believe for the first time in history, next year we'll see 50% of the global population in the middle class, and that will come from Asia, predominantly driven by India and China. And 60% of the global growth is coming from India and Asia, excluding Japan. So that's where we are. So we have this opportune moment, and I don't see enough discussions and initiatives around. It's highly political, and And when you say you're signing treaties with countries, it doesn't go very well with the masses. But I think as a country, we have to figure out where we fit in this trade corridor. Yeah.
Thanks, Patrick.
Yes, thanks. So Mano, you mentioned exports and increasing exports, and I think that's fantastic to hear. That what we didn't see in this budget was any acknowledgement for the companies that have markets here in Sri Lanka that also play in the export game. So I think the ESC rate reduction, no doubt, is good to see. However, the Ministry of Finance could consider those companies that are not pure exporters and the taxes that we pay on our export revenue relative to the companies that solely rely on exports.
Thanks, Patrick. Useful.
Hoping to see more done in terms of streamlining the number of taxes that we have. We have a multiplicity of taxes with so many revenue returns, so many payments and so on. But I'm sure they're working on it, but there wasn't reference to that this year. And also there wasn't reference to divesting non-core assets, although Mano just confirmed that the Hilton and Hyatt is very much on the cards. So those were two areas.
Ms. Vijayawardena?
Yeah, I think this is a further elaboration of the point raised by Chandra about the country taking a medium to longer term view, where we would be by year 2030, and whether the budget has got itself aligned to this particular longer term objective. In my view, it's a matter for the National Economic Council, which is under the chairmanship of the President, to come up with that kind of a program. And once it comes up with the program, I think the Ministry of Finance will have to align its budget to the achievements of the targets there. Right now, what the budget has done is that it has aligned itself to the National Economic Export Strategy put forward by the EDB. And we have to wait for the National Economic Plan, which is yet to be released by the National Economic Council. And once it is out, I think the Ministry of Finance will have to align itself to that particular plan, so that we will be able to attain the goal of Sri Lanka by year 2030.
Ramya, before I get to this NEC created by President's requirement, but President party is not part of the coalition, and there is this feeling that NEC is not really effective. Manu, just what is the real politics?
No, the reality is that if you look at it from a political point of view, it's a bit of a disjoint. But also in reality, it's not as bad as it sounds. There are responsible people in the NEC. And now at an official level, there is quite an interaction. Though there may be odd ones where politics get involved, but there is some interaction. It's not ideal, but it's not a deal breaker as well.
Okay. Ramya, what was lacking in this budget?
I won't say there's lacking, but I would suggest there are, if you take all together, there are 31 types of taxes. So, but they are not related to one industry. But yet, I would suggest if these taxes could be simplified for a fewer numbers, so that in our corporate environment and in our offices, we can reduce the number of people who are working for different tax areas.
And reduce the workload of the government as well.
And also, the tax department should be made online. There's unnecessary work involved for our people to go up and down for various requirements.
Thank you. I think this consensus appears that it's a positive or a development-oriented budget, not an election budget, but I think you'll keep hearing that in the next few days when people go back to and start in the budget. So I want to thank all of the panelists for being very frank and sharing their ideas as well as recommendations, and also to the audience for making it interactive. Please give a round of applause to the panel. There are several key takeaways, I'm sure. Manu, would you like to sort of give a final message?
No, just to say one thing, overall, I think the point is that we really want to, and I think we have to convert our economy into a tradable one. That's very important. Though we say that we are an open economy, I was horrified to discover last year that we have something like 6,800 cess and PEL items. We are one of the most closed economies. So on one hand, we have to protect local industry, but that protection has to be tempered by the fact that are we going to impose such costs on the rest of the 20 million people. So we have to move to a tradable economy. That means we have to remove upfront costs. I don't think we need to be scared about that. So that's why in the budget, particularly Deshal will add to this, there is a mention of this in a very serious tone, and a productivity commission is going to be set up where we can address. And also the minister has said that we will move in a planned way over a 5-year period. So, but I think that move is important because protectionism is not going to work. And unless we move into a tradable economy, we are not going to benefit from our geographical and strategic location in this part of the world. We can talk till the cows come home, but we will not benefit from the Indian improvement or Indian GDP, and we will still be in this position. All the countries that have moved past us have taken that step and moved to an export-oriented tradable economy where people don't ask for tax concessions. People ask for their costs to be reduced, which is much better because it keeps both parties happy. So my point is that we have to make that concerted attempt in moving us towards a tradable economy, which we are not.
Thank you. Thank you very much.